So up until now, we've talked about how we can go about identifying our opportunities, right? We've talked about support and resistance levels. We talked about the market dynamics. We've talked about figuring out where the price is going, so following the price. But once we've identified opportunities and once we've figured out where it is that we want to take a trade from, how is it that we get into the trade? That's kind of like the burning question, right? And that's what we're going to talk about in this video. So let's take, for example, the Australian dollar. I've put in some support and resistance levels in here, and we put it in actually in a previous video. So we've got some support and resistance levels in here. Remember that for the first part, we want to be taking trades from levels that kind of make sense. That's always going to be your first port of call. Wait for the market to get to a support or resistance level and then start, building into your trade idea from there. Once the market moves away from that support or resistance level, then there are other things you can do to get into the trade. And we'll talk through all of that in this video here. So the first one that we want to talk about is how do we get into the trade when the market approaches a level? So this is a resistance level here. The market has rallied up to it, okay, and we know it's a resistance. It's been resistance in the past, so we're expecting something to happen, okay? The market comes up to this level and it can't get through it. So that's our first clue that we want to have a bit of a bounce, right? Because in theory, you can take a breakout of this level or you can take a bounce of the level. We'll talk about the breakouts later, but for the moment, let's focus on the bouncing of the level. So that's a rejection of the level. So the market comes up here and it doesn't really break it. Even if it does break it, as long as it sort of closes back below this level here, and so the price action takes place below the level, then we're looking for a short opportunity. So the market has moved up here, it has rejected it, it's come down and it's made a low, which we can see over here, right? So we've got a high, we've got a low, then the market attempts to go up and rally to break the high again, and it fails to do that. What we're waiting to do as traders is we're waiting for the market to break through the level, okay? So we want it to break through this support level that we've got here, because that's going to be our indication that actually the market wants to go lower. Why? Because on the previous attempt to break the high, it didn't really do that. And then when it comes to this low here, if it breaks this low, it means that there are more sellers in the market here than there were at this point here. And this is what you need to think about as a trader. You need to kind of put yourselves in the shoes of the professionals. So forget the fact that you've got a small account. That doesn't matter. You need to think about it as if you've got a massive multi-billion-dollar account and you move the markets. What kind of signals would you take? Because the truth is that the hedge fund managers, they're human beings like yourselves and like myself. So they're going to make similar decisions. And you just need to put yourselves in their shoes. So when this happens, the market breaks this level. We get involved there. We're always looking to put our stop behind a technical level. And we want to put it maybe 10 to 20 pips behind a technical level, not just sort of 4 or 5 pips, because if you do that, then you're likely to get stopped out if the market just kind of, tries to run the stops at that level, and we want to avoid that. So we get involved here. We place our stop, 10 to 20 pips above the high, and then you wait for the market to hit your profit target, which could be 1 to 1, it could be 2 to 1, it could be the next support level down there. Who knows? That's something that you have to decide for yourself what you want in terms of a profit target. One of the things I like to do is at least go for a 1 to 1 and then maybe use some sort of another level of support and resistance, maybe even a minor one, as an opportunity to take profits. Some people like to trail their stops. Everybody has something that works for them, and that's kind of something that you need to work on for yourself because you need to be happy with it. Okay, but anyway, that's our first trade there. Remember I said that you can take the bounce from the level and then you can do other things. So by following the price, taking the price into account, we can see that we've had a rejection of this level here. So where is the most likely place the price is going to go next? And the answer to that is it's probably going to go lower. So what do? We put in another support level here, which we can see the market is playing with it. And we wait for the market to break that level. The next time it breaks a level, we want to be short there. So we'll be taking a short from this area here. We'll have our stop above the highs. And eventually you can see that it does fall off and it goes off to pay us. But there's another opportunity here as well. Do you remember I was talking about trend lines in our support and resistance level, module? Well, in here, you can see that we can take a trend line break. So the market had been respecting this trend line. Look, bounce, bounce, bounce. Eventually, it kind of consolidates towards the bottom of it, which is a clear indication that the market's going lower. Remember, what I want everybody to do that's watching this video is just think logically about things. Don't try and be too systematic in your approach and too scientific. Just think logically. Look at the chart. Where is the price going? Okay, that's a simple question. Where's the price going? If it's going down, you need to find a way to sell the market. If it's going up, you need to find a way to buy the market. Really, trading can be as simple as that, right? So in this position here, we were looking for a sell because we thought it's bounced from that level. Clearly, there's momentum to the downside. It's probably a better opportunity to sell than it is to buy. So we would sell through that level there. Then the market sells off. We see here we've got another trend line break on our hands there. So over here we can see we've got something similar to before. We've got sort of like a trend line break there. Let me move that up like that. Okay, and then again you can take the break of the trend line. So when it breaks here, you have your stop above the highs, and you either target the lows there, or you go for 1-to-1 or 2-to-1 or something like that. Now when the market gets down to the lows, all right, so to the next support level, you've got a decision to make. Are you looking for a bounce, or are you looking for a break? In this case here, and the way that I typically categorize it is that I'm looking for a bounce from a level if the price action that gets me into the trade is on the sort of like on the side of the support or resistance level that doesn't signal a breakout. So from a support perspective, as long as price is above that support level, that's an indication to me that that support level is going to hold and the market's going to rally off in my direction. If the market breaks that level, so it gets beneath here and the price action takes place beneath that level, then that's an indication of a breakout, and that we're going to get to sell off from that support level. However, in this case here, looking at the price action, following the price, we can see that the market rejects this level. It then rallies up, it comes down, all right, and at this point here, this is where we get our support and resistance line, okay, and what we can do is literally do a horizontal line like that and say the next time the price gets above that level, I'm going to go long. It may be today, it may be next week, it doesn't matter, I'm going to go long at that level. Eventually the price does break and close above that level there, and as you can see, it then goes off to pay you. Your stop again would be beneath these lows, because we don't want to be in a position just kind of arbitrarily get taken out of a position, which is what so many rookie traders do. They kind of they strangle their position so much because they want to have a small stop loss that they don't really give it a chance to succeed. So anyway, we've got our thing on that level there. The market then rallies off and it goes and pays you. Very nice. Again, like we had before, you've also got opportunities once it's broken that level. So we can see that the market's moving up. Now we want to be looking for long opportunities. We could then take a break of this trend line. Okay, so we've got a trend line in there. When it breaks it, we can be buying it, hoping for the market to move up, which it does. What I'm hoping you can see here is that there's no sort of silver bullet. There are no magic beans. It's just logic and common sense for getting involved in the trade. Figure out which direction is the market going in. Which way does it want to go in next? And then look for the opportunity to get involved in the trade, okay? And remember, the core to getting involved in any trade is buying or selling through support and resistance. So always have a level there, just even an intraday level that you can go to take your trade from. Once you've got that level, you can take the trade, you can place your stop in a logical place, and hopefully you can come out ahead of the game and make money, right? And if you don't believe that this stuff works, just go and look at it all over the charts. Test it for yourself. Taking a look at this one here. If we put in a support level there, like so, okay, the market comes up to this level. It doesn't really spend much time above it. The price action takes place beneath the level, so I'm looking for a sell here. This is going to be another bounce. When it breaks it, you could then take the sell from there. In this case, the market then comes up, and depending where you put your stop loss, right, we would have been kept in here because our stop loss is typically 10 to 20 pips away. But if you had strangled it, you would have been taken out there. No big deal. You're going to lose trades. Traders do lose money. It's just part of the game. It's how you handle it that is what's important. So the market would have taken you out there, hypothetically, right? You move your support or resistance level down to the next support level, in this case because we're trying to sell from resistance. When the market breaks that level, we can get involved again. So we could sell the market there, stop above the high, and then sure enough, as you can see, the market goes off and it pays you. And that's one of the beauties of this thing. It is a very, very straightforward way of trading. It doesn't need to be over complex. People try and make it too complicated, but it's not, and it doesn't have to be. All right. So what I would recommend you do now is go back over your charts and sort of look at how price interacts with support and resistance levels. Look at, the breaks of the intraday levels, like I've shown you here. Don't just look for bounces, look for breakouts. Breakouts are when the price action takes place the other side of the level, but the principles are the same. You bracket a range, you look for a support or resistance level, and then you sell or you buy through those levels. As simple as that. Okay. So I hope you enjoyed this video on entries. What we have to do now is we're going to do a video on the strategy itself. So try and bring everything together. And then once we've done that, I think you've got yourselves in a pretty good position to be able to go away and really start utilizing this and seeing if it can make you money in the markets. Okay. So thank you very much for watching, and I'll catch you in the next video.